Setting up a business in Utah. Utah Department of Commerce Division of Corporations and Commercial Code. The easiest way to form an entity in Utah is with the one-stop business registration process. An entity formed outside the state of Utah must register as a foreign entity. The individual operating a business in this model is expected to report income with a Schedule C and Form 1040. Advantages: sole proprietorship simplicity. A sole proprietor with no employees does not need to obtain an employer identification number, EIN, from the IRS. Limited partnerships. A limited partner's financial responsibility is limited to the liabilities of the business. Disadvantages: partnership. Joint and individual liability. Partners are not only liable for their own actions, but also for the business debts and decisions made by other partners. S corporations typically file taxes on Form 1120 seconds. An S corporation must record at least one set of corporate minutes annually. Corporations use Form 1120 or 1120A, a U.S. corporation income tax return, to report revenue to the federal government. Advantages: C corporation. Liability protection. Corporations create a new legal entity. By doing so, they assume all liability, passing nothing on to shareholders. Transfer of ownership in a C corporation is accomplished through sale of stocks. Tax advantages: the legal entity of a corporation files taxes separate from the owners. Double taxation. Corporate profits are taxed at the corporate level and again when dividends are paid to the shareholders. A C corporation does not receive pass-through tax treatment. Limited liability company, LLC. An LIC may be classified for federal income tax purposes as a partnership, a corporation. Advantages: LLC. Reduced record keeping. Although there are more record keeping requirements with an LLC than a sole proprietorship, there is far less than with other business forms offering similar advantages. Section 2. Risk management and safety. General liability insurance is issued to protect against liability claims for bodily injury (BI) and property damage. PD liability insurance is designed to offer specific protection against third-party, non-employee insurance claims. Umbrella liability. This coverage can provide additional limit over the underlying primary. Property insurance. Commercial property insurance protects the property of the business, such as buildings and equipment. Fire insurance, flood insurance, or earthquake insurance. These are called named peril or all-risk policies, R150-655A to 302D. Qualifications for licensure, proof of insurance, and registrations. Public liability insurance in coverage amounts of at least $100,000 for each incident and $300,000 in total. Contract surety bonds. Miller Act, which dictates that performance and payment bonds are required for all federal construction projects over $100,000. Types of bonds. Bid bond provides a guarantee to the project owner that the bidder will complete the work according to the terms of the bid if selected. Maintenance bond provides protection to the project owner against defects in materials and work for a specified time after project completion. Payment bond provides a guarantee to the project owner that the contractor will pay all subcontractors and suppliers. Performance bond provides a guarantee to the project owner that the contractor will complete the project. Independent contractor licensure and exemption requirements. To determine whether an individual is an independent contractor or an employee, the IRS examines evidence in 3 categories: behavioral control, financial control, and type of relationship. Form 1099. A business owner is required to provide a Form 1099 for each independent contractor who they paid $600 or more during the year and who is not a corporation. R156, 55A to 501. Unprofessional conduct. The state of Utah requires any employer with 1 or more employees to carry this insurance. It does not matter if the employee is full-time, part-time, seasonal, etc. If the workers fit the IRS definition for employee, their insurance is paid by the general contractor. The general assumes the responsibility of collecting certificates of insurance for each. Subcontractor. Failure to do so will shift liability of the subcontractor's employee premiums to the general contractor. An employer is required to report an injury on Form 122, employer's first report of injury or illness, to the insurer within 7 days. The insurer reports the injury to the Labor Commission. Employees have 180 days to report a work-related injury or illness. Section 4, Regulatory Requirements, Occupational Safety and Health Administration OSHA. 29 CFR 1926, Safety and Health Regulations for the Construction Industry. Utah OSHA UOSH. A state plan is an agreement between the state and OSHA for the state to develop and enforce a standard that is at least as effective as the federal standards. The most common cause of accidents in the workplace are in unsafe actions. SHARP, administered B, UOSH. To participate, an employer requests a comprehensive consultation visit from UOSH, corrects all hazards identified, and implements safety program in their company. Employers with more than 10 employees have specific OSHA record-keeping requirements. Employers with more than 10 employees must maintain and retain OSHA Form 300, log of work-related injuries and illness for 5 years. Employers with more than 10 employees must maintain and retain OSHA Form 300A, summary of work-related injuries and illness for 5 years. Summary page must be posted from February 1st to April 30 of the year, following the year covered by the form. Employers are subject to OSHA inspections. OSHA may conduct the following inspections, investigations: underground utility safety. In order to request a locator to come out to your work site and mark any underground utilities, call the Common Ground Alliance CGA at 811. Employer responsibilities. Examine workplace conditions to make sure they conform to applicable OSHA standards. Report to the nearest OSHA office all work-related fatalities within 8 hours. Employee rights. Protection from retaliation. If an employee believes they have been retaliated against in any way, they must file a whistleblower complaint within 30 days of the alleged retaliation. Asbestos. If a contractor suspects the presence of asbestos on the construction site, they should have the site inspected by a certified asbestos inspector prior to the start of construction. Some examples of hazardous construction waste are gypsum drywall, asbestos-containing paint, lead-containing pipes, and treated lumber. Lead. In homes, childcare facilities, and schools built before 1978. The contractor must provide the owner with a lead informational sheet. Demonstration of financial responsibility. The license application will ask if any judgments, liens, taxes, or child support. Delinquencies have been levied against the applicant, qualifier, owner, or previously owned entities in the last 8 years. Section 5, Financial Responsibility. Record keeping. Bookkeeping is the clerical part of accounting, so it does not require in-depth knowledge of the entire accounting cycle. Business entity concept. This means every business will be treated as a separate entity and not intermixed with other business or personal finances. This presents some challenge to sole proprietorships because there is not legal distinction. For accounting purposes, the funds should be kept separate. If money is transferred from business to personal or personal to business, it should happen with a formal accounting process. Following this principle keeps business history and projections accurate. The best way to accomplish this is to open a separate checking account for your business. Cost principle. This principle means that all transactions will be recorded on the books at actual cost rather than value. For example, if a builder purchases a lot at $75,000 from a distressed seller, it is recorded at $75,000. Even cash basis accounting. Income and expenses are recorded in the period they are received, accrual basis accounting. The accrual system measures a company's performance and position by recognizing economic events when they take place, rather than when cash changes hands. The percentage of completion method is often used for longer-term projects. Financial statements. Financial statements are the product of accounting for completed financial transactions. Balance sheet. The balance sheet is a statement of the assets, liabilities, and capital of a business at a particular point in time. A balance sheet tells the reader the financial position of a company by indicating types of assets and liabilities. The income statement is the report that clearly shows the profitability of a company. Profit analysis. Gross profit is simply the amount of retained income after the costs of production are deducted. Sales, cost of goods, equal to gross profit. Things that can impact gross profit are fixed costs or indirect costs or overhead costs are the set costs a business incurs from general operations. These expenses are recorded as operating expenses. Another way of saying this is costs of being in business. Gross profit margin or ratio is a measure demonstrating how efficiently management uses labor and supplies to complete the project. The formula is gross profit, total revenue. Target profit example fixed cost $10,000 target profit equal to $100 contribution margin equal 25% break. Even equal to fixed cost plus target profit. Contribution margin $10,000 plus $100,000, 25, equal to $440,000 for this item. Markup equal to $1.50 to $1. 0 equal to 50% gross margin equal to $1.50 to $1. $1.50 equal to 33% to convert gross margin to markup equal to 50% to convert markup to gross margin equal to 1 plus 50 equal to 33%. Financial ratios. Liquidity ratios measure a company's ability to pay off its short-term obligations. Liquidity ratio or current ratio equal to current assets. Current liabilities quick ratio equal to current assets inventory. Current liabilities working capital equal to current assets current liabilities. Net profit margin equal to net income, revenue, federal estimated quarterly tax. An individual must pay federal estimated quarterly tax. If both of the following apply, you expect to owe at least $1,000 in tax for the current tax year, after subtracting your withholding and refundable credits, and you expect your withholding and refundable credits to be less than the smaller of 90% of the current year tax, or 100% of the previous year tax. January 1st, March 31st, due April 15th. April 1st, May 31st. Due June 15th, June 1st, August 31st. Due September 15th, September 1st, December 31st. Due January 15th. Utah estimated quarterly tax. However, every corporation with a tax liability of $3,000 or more in the current or previous tax year must make quarterly estimated tax payments. $1,000 or less equal to annual filer. Due January 31, $1,001 to $50,000 equal to quarterly filer. Due April 30th, July 31, October 31, and January 31, $50,001 to $96,000 equal to monthly filer. Due last day of the following month, $96,001 or more equal to monthly filer. Due last day of the following month, mandatory EFT payments. Section 6. Construction Business Practices. Estimating and bidding. Bidding. One of the most important activities of a construction business is accurately bidding work. This complex process starts with an estimate. A bid is the formal proposal to provide labor, equipment, and materials in a specific manner and time for a certain price. An estimate is a projection of the costs. An accurate estimate is central to any bid, but note the bid encompasses much more. Contractors must consider the scope of work, costs, company resources, and capabilities to perform the work, location, and schedule before submitting the bid. Many of these items will have an impact on the estimate, but some may disqualify the job before any time is wasted compiling numbers. The bid process requires the completion of and begins with an invitation to bid. Invitation to bid. This is a document that provides the bidder with a brief overview of the project. Bid schedule outlines dates and times to complete the bid. This may include mandatory meetings, which can be held on the site or in an office. The schedule should be watched closely for critical dates. Construction specifications spec provide the details for the work to be completed, including types and quality of materials, quality of workmanship, etc. Scope of work. This is an explanation of exactly what is involved in the project. A complete understanding of the details and unique characteristics of the project is essential to an accurate estimate. Capabilities. The law states practicing or attempting to practice an occupation or profession regulated under this title beyond the scope of the licensee's competency, abilities, or education is unprofessional conduct. Once the scope of work is defined and the contractor is comfortable the project is within their field of knowledge and experience, they can provide a quick, non-binding estimate. It saves everyone a lot of time and trouble to not compile a bid. Location. Some municipalities have extremely high impact fees. There are some that also have higher permit fees. It is advisable to contact the building department in that area to determine costs. Schedule. A contractor should carefully look at their current workload to determine how a new project may impact current flows. Estimating. Estimating is the process of calculating quantities of work. A good estimate includes all the expenses associated with the particular project. This estimate helps owners gauge projected costs to secure financing or consider revisions. The architect places every detail into the proper division with associated specifications. Procurement and Contracting Requirements Group, Specifications Group, Division 08, Openings Division 31 Earthwork. Reviewing past estimates perfects your ability to accurately predict future costs. Takeoff. If the bid documents lack enough detail, a request for information (RFI) should be submitted. Material list. Once the takeoff is done, a material list is quick and simple. Equipment. Any large equipment necessary to complete the job is figured as a direct project cost and needs to be added to your estimate. Each trade will have formulas based on industry norms and company history that drive waste calculations. Contingencies. A contingency percentage may sometimes be added to an estimate to provide a buffer or protection to the contractor if an unanticipated condition or problem arises during the project. Labor. Labor estimations are the most difficult part of the estimation. One of the best was to estimate the hours required for a task is to refer to prior job cost records. Labor burden includes things like unemployment insurance, workers' compensation insurance, and state and federal withholding taxes. Overhead. Every business has indirect costs, or costs associated with general operations that cannot be specifically allocated to a single project. Other overhead expenses may include an office, accounting personnel, and administrative support. Some companies offer free estimates. Overhead is usually a percent of the total labor and material estimate. Markup or profit. The markup includes profit, and depending on the particular company, the markup may also include overhead costs. Markup and profit often get lumped in with overhead. If markup on a bid is too high, a company may not be awarded a bid. Other estimating methods. Cost per linear foot or cubic yard. The square foot method. Bidding ethics. Bid shopping occurs when a contractor divulges submitted bids to reduce the price. Bid peddling occurs when a contractor coaxes the company receiving the bid to reveal the lowest bid. Bid rigging occurs when contractors coordinate bids to fix the outcome of the award. All three practices are considered unethical. Computer-aided estimating. These programs speed estimating up and reduce the possibility of human error. The use of a computer in estimating increases the likelihood of consistent and repeatable processes. If a project is expecting delays because of weather or projected price increases, the computer will not calculate those factors without proper input. Final reviews. Although this is part of the planning process, it is more beneficial for planning of future projects. Calendar. This is a simple method that has little upfront costs and doesn't need a computer. Gantt chart. In 1910, he created the bar or Gantt chart, a work breakdown structure, WBS, critical path method. CPM is another method of scheduling. This scheduling method requires specialized software. The concept of CPM is it looks at activities that are dependent on one another, then puts them in sequence. Duration is the amount of time needed to complete each task for the project, regardless of the scheduling. There are many industry standards that can provide duration times for specific activities. The functionality of the entire schedule hinges on correct duration estimates. Float time, the amount of time an activity, network path, or project can be delayed without changing the completion date of the project. Float time is also available time in the schedule as a result of an activity finishing early. Note, the architect or engineer will usually be the one to certify to the owner when progress payments should be made. Supervision. Project managers are typically responsible for setting quality standards, budgets, and schedules. The superintendent plays a critical role in any project. They are the eyes and ears on the site every day. They are responsible for quality control and reviewing the punch list. Foreman. Foremen assume responsibility for individual tasks on the project. Purchasing agent. They evaluate suppliers, negotiate contracts, and review product quality. Communication is without question the first and most constant ingredient for success. It is recommended that change order processes be spelled out in the initial contract. Cost control and budget. The baseline for the budget is set during the estimating and bid process. Materials. Just-in-time IT. The short explanation of this philosophy is to have materials delivered as close to the moment needed as possible, keeping inventory levels as low as possible, and having materials shipped as close to when they are needed as possible reduces working capital requirements. Value engineering means minor changes in material, building layout, or design that will reduce the overall cost without changing the intended function and intent of the project. When faced with deciding how to manage cash in a deficit environment, a good strategy is to make small payments as soon as possible. Contracts. Mutual assent, agreement, or offer and acceptance consideration. Competent parties. A person must be at least 18 years old to legally enter into a contract. Boilerplate provisions augment the construction contract and lay out the rules under which a project will be built. If a party to a contract requests that a contract include language that is not usual or standard for the type of contract, it is advisable to have the contract reviewed by an attorney. Material breach. Material breach is a significant violation of the contract that warrants or causes the stopping of a project. If a contract is unclear, the judgment is typically made against the party who wrote the contract. Contract requirements. General conditions, supplementary conditions, including temporary facilities, material substitutions, special cleaning requirements, etc. Construction drawings. Section 7. Employee management and labor law. Federal income tax withholding tax. Income tax must be withheld from employee checks. It is not matched by the employer. The amount withheld is calculated based on information provided by the employee on IRS Form W-4, Employee's Withholding Certificate. An employer should collect a completed Form W-4 from each employee. If an employee selects exemption Form W-4, the employer must collect a new Form W-4 by February 15th of each year. Social Security and Medicare taxes. Social Security and Medicare taxes are mandated by the Federal Insurance Contributions Act, FICA. Social Security tax is calculated at 6.2%. Federal withholding, Social Security, and Medicaid are filed together quarterly on Form 941. How often an employer must deposit these taxes depends on their total tax liability for a 4-quarter look-back period. Federal unemployment tax. It is filed annually by January 31 on Form 940. Form W-2. Postmarked by January 31 of each year. Utah withholding tax. Utah withholding taxes are filed quarterly. If an employer withholds $1,000 or more each month, tax payments and deadlines. Generally, if a due date for performing any act for tax purposes falls on a Saturday, Sunday, or legal holiday, the act is considered to be performed timely if it is performed no later than the next day that isn't a Saturday, Sunday, or legal holiday. IRS Circular E. Comprehensive overview of payroll taxes and supporting documentation. In Utah, employers are required to report any newly hired or rehired employees to the Utah New Hire Reporting Registry within 20 days of hire. The potential penalty for failure to report a new hire is $25. If a conspiracy to avoid reporting is determined, a fine of $500 may be assessed. Employment Eligibility Verification I-9. Form I-9 is used to verify the employment eligibility of individuals hired. Form I-9 must be completed within 3 days of hire. Section 1. Employee information and attestation. Employees must complete and sign Section 1 of Form I-9 no later than the first day of employment, but not before accepting a job offer. Many companies establish performance standards and an employee evaluation system. Voting leave, 20(3) to 103. Employees' right to time off for election. 1. Each employer shall allow any voter to be absent from service or employment on election day for not more than 2 hours between the polls open and close. COBRA generally requires that group health plans sponsored by employers with 20 or more employees in the prior year. Final paycheck deadline, and the employer shall pay the wages to the employee within 24 hours of the time of separation. Private sector employers are covered by the FMLA if they employ 50 or more employees. Equal employment opportunity. Title VII of the Civil Rights Act of 1964. The Age Discrimination in Employment Act of 1967 ADA applies to employers with 20 or more employees and prohibits discrimination against individuals who are 40 years of age or older. The Americans with Disabilities Act of 1990 ADA prohibits discrimination for disabilities and applies to employers with 15 or more employees. Veterans Employment Policy. An employer may create a Veterans Employment Preference Policy without violating the Utah Anti-Discrimination Act. A private sector employer may create a Veterans Employment Preference Policy that may also apply to a veteran's spouse. Fair Labor Standards Act. FLSA sets standards for overtime pay of not less than 1 1/2 times regular rate of pay after 40 hours of work in one work week. Each employer shall preserve for at least 3 years payroll records, collective bargaining agreements, sales and purchase records. Records on which wage computations are based should be retained for 2 years, i.e. time cards. Minimum wage, $7.25 per hour. Exemption is an employee who is a member of the employer's immediate family, subminimum wage. A worker's pay rate may be less than the minimum wage only if the worker's disability reduces his or her ability to do the job. The purpose of this exemption is to encourage employment opportunities for workers with disabilities, perform exempt job duties including executive, administrative, professional, outside sales, and certain computer employees. An employee who performs blue-collar or manual work must be treated as non-exempt. The Fair Labor Standards Act does not require vacation, holiday, or sick pay. Child labor laws. Utah requires meal and rest breaks for minor employees. Minor employee must be given a meal break of at least 30 minutes. These restrictions include operation in or about establishments manufacturing or articles containing explosive, storing explosives components, motor vehicle drivers and helpers with exceptions, coal mining operations, logging operation of any sawmill, lath mill, shingle mill, or cooperage stock mill, operation of power-driven woodworking machines, jobs involving exposure to radioactive substances and to ionizing radiation, operation of power-driven hoisting apparatus, operation of power-driven metal forming, punching, and shearing machines, operation connected with mining other than COAT, Employee Polygraph Protection Act, employees suspected of workplace theft, employment posters. Employers are required to post certain labor law or employment posters. Utah Occupational Safety and Health Act, Utah OSHA, Statistics, Utah Workers' Compensation Act. Appendix A, State Construction Registry, Original Contract. A means a contract between an owner and an original contractor for pre-construction service construction work, and 38-1 a 501 preliminary notice. A person who desires to claim a construction lien on real property shall file a preliminary notice with the registry no later than 20 days after the day on which the person commences providing construction work on the real property. A person who files a preliminary notice under subsection 1 Key 1 may not claim a construction lien for construction work the person provides to the construction project before the date that is 5 days after the preliminary notice is filed. 90 days after the date on which a notice of completion is filed under section 38-1 a 500, and 7, but not later than 180 days after the date on which final completion of the original contract occurs. 2. A notice of construction lien shall contain, within 30 days after filing a notice of construction lien, the claimant shall deliver or mail by certified mail a copy of the notice to the reputed owner or the record owner. 38-1 a 701 Action to enforce lien. Time for filing action. Notice of pendency of action. Action involving a residence. Except as provided in subsection 2b, within 180 days after the day on which the claimant files. In a notice of construction lien. A pre-construction lien or construction lien is automatically and immediately void if an action to enforce the lien is not filed within the time required by this section. 38-1 a 703 Order of satisfaction, if multiple liens on same property. Subcontractors who are laborers or mechanics working by the day or piece, but who have not furnished materials, all other subcontractors and all materialmen and original contractors. 38-1-803 cancellation of pre-construction, 01 construction lien, penalty for failure to cancel timely. 2. Within 10 days after receiving a request under subsection 1, the claimant shall submit to the office of each applicable county recorder a cancellation of the pre-construction or construction lien as applicable. Appendix B, Utah Construction, Trades Licensing Act, 58 to 55 rules, R 156 to 55A. Contractor does not include I, an alarm company or alarm company agent, or Hi, a material supplier who provides consulting to customers regarding the design and installation of the material supplier's products. A, general engineering contractor, means a person licensed under this chapter as a general engineering contractor qualified by education, training, experience, and knowledge to perform or superintend construction of fixed works or components of fixed works requiring specialized engineering knowledge and skill in any of the following: in water power, IV, water supply, residential and small commercial contractor, multi-family residences up to 4 units, and commercial construction of not more than 3 stories above ground and not more than 20,000 square feet. Construction Services Commission. Created functions, appointment, qualifications and terms of members, vacancies, expenses concurrence. Meetings, 1 there, is created within the division the Construction Services Commission. The Commission shall, I, with the concurrence of the Director, make reasonable rules under Title 63 Grams, Chapter 3. Utah Administrative Rulemaking Act to administer and enforce this chapter, which are consistent with this chapter, including licensing of various licensees, examination requirements and administration of the examinations, to include approving and establishing a passing score for applicant examinations, standards of supervision for students or persons in training to become qualified to obtain a license in the trade they represent, and standards of conduct for various licensees.